Hey there, it's Will. I thought I would talk about Blackberry and sort of my approach to looking at stocks, which is I've done in many videos, and but I've made a few adjustments to for finding stocks and the time frame. So I'm using TC2000. If you want to check out a free trial, or you can get $25 off. I've got the gold plan and real-time US data, and so I've done a lot of videos on it. So anyway, for BlackBerry, it's up 25%, 24% today. So this is the daily chart. You can see that it was coming up and then this booster. So I actually have this stock, and but you never know when that particular boost is going to happen. But you can sort of get into stocks that have a chance of that happening. What I've been doing lately, because I found that I was watching a little bit too closely on a daily basis, so I kind of look more at a weekly time frame, and I look for a breakout above, a recent high. So depending on how far back you go, there's one up here. If you're looking a little bit closer, you could put it, down, say down there. On this chart, I've got a volatility stop. So TC1000 gives you this green or red dot, which is it takes into account the average true range, so the volatility of the stock. So it kind of keeps you below. But once you hit, so if you were putting your stop and moving it along, and then it would get hit here, and then you see these red dots, you wouldn't be buying. Once you see a green dot, your stop is below the price. So that's when it's a signal that you could potentially get in again. So you have a breakout on this week here. You have the green dot, and the green dot's going to form at some point. So it might be red initially, but then it'll turn green. So it's not like it happens right away. And you might want to wait for the week to finish if you're using weekly charts. But this dot, the first dot, is a bit risky in the sense that it can switch, at the end of by the end of the week. But it gives you an earlier entry. This is the approach I use. It's either a flat line like that, or it'll break a downtrend. See if I can have an example of that one. So you could draw a line, if you wanted to, when you have a downtrend like this. But the first break is not necessarily, where you would enter. You would want to see, what I like to see is basically a candle. I want to see it above the 8 EMA, which it is here, but there's still red dots. You have this downward stochastic and sort of the momentum. You see, this is the MACD type of thing. It's price percent oscillator, so it adjusts to remove the price value in the calculation, so it can be compared across different stocks. And you can see that there's a downward sort of momentum right here, but we are seeing some of it, a little bit of an incline. But what happened was they just had an earnings report. People didn't like it, even though it was pretty amazing, the revenues and stuff like that. And you can screen stocks for, like, I combine now fundamentals. I want to make sure they're good growth type stocks, good earnings, at least good sales. If it's an earlier stage, you want to see increasing sales. You won't necessarily have a positive earnings at that point. If I go to the fundamentals tab, I can see here, the earnings percent change, which is obviously really good for Zoom, and also the percent change in revenue. I added this little, well, it depends on the chart, but on different tabs you can have different indicators and stuff like that. But return on equity is one of the measurements for companies that generally have some sort of earnings. As you see this increase in return on equity, which is obviously really good. if we go back, or so we can look at, we can put the data in the columns as well. So instead of, clicking on each stock and looking at this, you can put the important columns in TC2000 for a particular watch list, and then you could sort by the earnings percent change, earnings per share percent change, and find the top ones, or you could put revenue percent change and find the ones that are at the top, or you could do return on equity and things like that, KLR, and then you take a look at the graph. You can also scan for certain criteria. So if I go easy scan and I type in EPS, then it gives me the latest quarter. So I can scan here. If you want a little bit more future projections, obviously there's FinViz and stuff like that, but I've been using MarketSmith. This is a new edition, which is because I look at fundamentals. I want to look at the fundamentals and in a easy to understand format. What I like about MarketSmith is that you can see all the earnings and the sales on one chart. So down here we have quarterly sales. So you can quickly look and see if it's increasing. Obviously there was a hit, around the March timeframe because of the pandemic. And you can see earnings per share. And then up here you have annual earnings per share. And then you have 2020 and 2021 estimates. So there's Simply Wall Street. They have really good estimates of revenues and earnings, and in a graphical format. So you might, check out different things. FinViz has a bit of a future look when you do your screens. But I like the fact that this is all on the chart. And what I do here is I look at a whole bunch of things. The number of funds, like to see that they're increasing. I look at, in some cases for, not IPOs, but, return on equity, the growth rate of the earnings, the PE ratio, which isn't always a great indicator for, more early stage. They have these ratings, composite rating, 90 or plus is great. The composite rating takes into account a lot of different things. So over here on the right, William O'Neill, he wrote a book, How to Make Money in Stocks, and he runs this Investor Business Daily site. It has a checklist, if the earnings ratings are greater than 80, the relative strength. On this chart, you also see relative strength, which, you want to see that the stock is doing better than the S&P 500. Ideally, the slope, the line's increasing here, the slope. I look at the other thing that's cool is you see other stocks in this area, and you can sort of see if they're better. Like if you see the earnings rating and the relative strength, I can look here and see potentially a better candidate for that. So what I do is I look at, I use MarketSmith to identify high quality stocks. There's a lot of, they have a growth 250, which they edit manually and then you see stocks that are near what they call a pivot, and that is the recent high. So that's kind of nice because you can see stocks that are breaking out or in a pivot, because you don't want to buy like when they're really way too high. So it shows here, which is really nice, a cup and handle pattern. So it recognizes that there's a cup, and then you're right, it says 3% from the pivot. So you're right close, and this is Revolve Group that, so you combine the technicals with the sales. But so right now I'm using both because you can put alerts in here and everything, but I like candlesticks and I like screening here, and I can sort of compare, and I've got my watch lists and stuff like that, and I'm scanning for a lot of things. They have a lot of cool screens in here. You can create your own, but I mainly wanted to explain that I'm looking for stocks that are like this one, it breaks this downtrend and you have the green dots, you're starting to create an uptrend. And sometimes it does break down through the EMA, but the volatility stops are underneath that. Or you could keep your stop way down here below a recent low and wait for the next low to establish. So once you start getting up here, you can put your stop here. And that's a conservative approach, or a more like a wider stop approach, where you're not going to move it as quickly. But these volatility stops can keep you a bit closer, but they do get knocked out every once in a while. If we go back to Blackberry, it's now up to 33%. One thing I wanted to mention with certain stocks, Switchback Energy, when you start going parabolic like this, you're definitely going to get a pullback. So you can see here, this is a daily chart. We came up, it starts going vertical, and then you have this pullback, and then you want to see if it's going to support at this point and start to go up again. But we have a kind of a declining MACD momentum and stochastics a little bit. So we'll have to see what happens here, but you might want to take some profits. So if you get this spike like that, you might want to sell some of your position. It depends on your philosophy if you're a long-term holder, but a lot of times these gifts are, you can take some profit, and then if it does come back down, you can buy in some more when it's lower, closer to the trend line. So, all right, guys, we'll talk to you guys later.